What's going on, everybody? This is Lauren with the TMAP podcast, and it occurred to me that some of you out there are trading options and you have no idea how to figure out what your option might be worth on or before the day of expiration. And so we're going to talk about that. But first, hit the like button, subscribe to the channel, hit the dinger, and let's hit my intro. Okay, before we get over there, here's what I'm going to say. Today I saw some comments in one of the Discords I'm in, and I realized that there's a lot of people out there who don't know much about options trading or the options they're buying or how to determine what it's worth or what it's not worth. And they're freaking out because guess what? Shit sold off after hours. So what I'm going to do is go over a website that allows you to speculate what your option will be worth. Now, keep in mind, this is going to be a generalized kind of idea of what it's going to be worth. It's not exactly, because you have other things in there like the volatility. You could hit the price a lot quicker than the expiration date. But we're going to go ahead and get on over to it. The website is called optionsprofitcalculator.com, and I'm going to put it in the description below. So you can click that and follow me here as well. And I'm going to show you how to use it. So when you go to the website, it looks like this. It actually looks like a website that was built in 1998. Now, here's what we're going to do. We're going to say, let's just say we're going to pick a call option. You bought a call option today, right? So we're going to click long call, which is bullish, right? Let's just pick one that I have here in my portfolio. We're going to say a Boeing call, right? So we're going to type the symbol BA. We're going to hit get price. Now, it's going to pull up the current stock price, which at close was $215.98. On the option, we are going to buy it because we did buy the option. We're going to select the option here. This is one that I actually own. So that's a 215 call. So we're going to click this. It's going to pull up the whole options chain. We're going to scroll down to the strike price of 215. Call. We can pick any of these in the middle. Now it's going to fill it in whatever it ended at. We're going to go ahead and put in what we paid for it, right? So I didn't pay $289. I actually paid $325. So I'm going to put that in there because that's important. That will determine your profitability chart to be more accurate. Now, you do have some manual settings. You're not going to worry about that. Stock price range is going to auto calculate it. So we're going to hit calculate. And it put the price range between 212 and 220, right? So that's saying that Boeing is going to go in between 212 and 220. This is the calculator here that's going to tell you where you're at profit-wise moving forward, and also some of your risk. Now, there is no IV kind of gauge here, but we could change that and say the IV change can go up or down and then calculate it accordingly. But we're just going to leave it in the middle for purpose of using this. So now we have this fun little chart right here. I'm gonna see if I can zoom in on this little chart on this side. Maybe you can see it better. Now, over here, as we hover over this is the date, right? October. Our option expires on the 22nd. So that will be the date of expiration, right? And then here we have the days before that. Now, as you see, the higher up the price goes, this number here changes. And it tells you as you hover over it what your option should be worth if it hits a certain price tomorrow. So tomorrow, if my call hits 217, I will be 8% in the green, or $26. If it hits 218, I will be 28% in the green, or $92. And if it hits 220 tomorrow, I will be up 74%, or $243, based on the information we have given this calculator. Now, as you can see, as it gets closer to the date of expiration, our profit tends to go away significantly. Now, anything over my break-even price is going to be okay. So I really need to be 218.33 if I want to hold this to expiration. This is the end of the day. The 22nd, this is going to be the beginning of the day. At the end of the day, it could be worth less. So keep that in mind, right? The further away you are, it'll show you your loss. So if you want to calculate, say, your stop loss, and you didn't know what price point that needs to be, you could use this to gauge that. If you didn't want to say, I'm going to sell my option, I paid $325, I'm going to sell it at, a stop loss of $250. I'm willing to give up $75. and now cut my loss on that one. Or you want to say, I want to make $75. You can set your alert on there if you don't know how to set your buy and sell limits in your brokerage. You should definitely look into that. I do have some videos about that in there as well. But this will give you an idea of your profitability range. Now, if I were to make it look a little better, I could say 225 by the end of the week, and we can extend this out, and it looks a little bit more green, but we have to be realistic that the odds of it getting to 225 are probably not going to be so amazing. So keep that in mind. If it did hit 225, that'd be up 212%, $688. That would be if it hit it tomorrow. If it hits that on the date of expiration, since I would be deep in the money, I'm still going to be up a good bit of change. But as you can see here, holding it at 225, if it hits that tomorrow and I just want to hold it, it's going to be worth less at the day of expiration. Now, the same thing goes for puts. If you have a put, you can click long put. You're going to input your information. We'll do one. I have a put on here. Let's find one. I believe I bought AMC puts because FU AMC. We're going to pick this one, $40 strike. Oops, that's a call there. We need to switch that out. We need the $40 of the puts are on the other side. And we paid for this put, I believe it was $93 on that. And then we're going to go ahead and calculate. And this is going to tell us where AMC needs to go for me to be green. Pretty much anything below $40.90. Really tomorrow, anything below 40.60 is going to be a break even. And then as it falls lower, my put is going to be worth more money. And if I want to have any chance, you want to sell it quicker, right? We don't want to wait and hold this thing until freaking Friday, unless there's a chance that AMC, say, goes to $32. Let's update this. If I want to lower it, that's the only reason I would want to hang it if I believe that AMC is going to fall that far. But as you can see here, our percentage kind of stops out, right? So if it hits $32 tomorrow and stays there till Friday, it's really about the same amount of money. So I hope this was helpful. You can also calculate other things such as credit spreads, call spreads, iron condors, butterflies. I can look at this one. We did a butterfly today on Netflix in the Discord as a lotto play. I'll go ahead and put that in there for anyone who was in the Discord and was wondering how this was going to work out. So lower wing, we bought the 650s, 650 call, right? One of those. We bought and it wasn't quite this much, but it's okay. The middle, we sold 2 of the 670s. So we're going to pick that one. And then the upper wing was a 690. So we're going to go ahead and put that in here as well. And then we're going to hit calculate. And you can see that our profitability range, if we want, and now keep in mind, this is slightly different in the terms that we want to actually hold this to the date of expiration because it's going to be worth more money. As you see here, that's just the way that this particular option works. In order for us to calculate and get the most out of our gain, we really want it to be at 670, right in the middle of those two on the day of expiration. That's where we want it to be. Anything below that or above that, we're going to be, losing money. So if we're freaking out because Netflix is right here at 630, tomorrow we're going to be down a little bit, maybe down 17 or 20%. If it starts going up, we're going to go back into the money. So we don't need to freak out about our Netflix butterfly specifically for this reason. Our chance of profit here, it does say our profitability is 24%, but that doesn't really account for a lot of things. So let's keep in mind that Netflix currently is sitting at 630. It's down 1.2%. All we need to do is move up about 3%, and this butterfly is going to be just fine. It's not about what it opens at tomorrow. Now, if it did open tomorrow, for one, I need to make this extremely clear. When Brandon posted in our Discord that the butterfly was a lotto, you can lose 100% of the trade. That is very true. 100% of the trade lost is anything below 650 on the day of expiration. 100% loss, right? Tomorrow, we will not lose 100%, but on the day of expiration, possibly. Now, if Netflix was at 670 tomorrow, we would only stand to gain $90 or 31% on this trade. The profitability that we could potentially gain is $1,700. But in order to get there, we have to hold it until Friday. And not only until Friday at the day when it expires, all the way freaking to the bell. At that point, you will make $1,700 or 600%. So if you're freaking out because you bought this, you're in our Discord and you bought this particular option, don't freak out because Netflix took a little spill. We are fine. We're a little further away than we would like to be, but you can still be okay. I don't want you to lose your shit. So I hope this is helpful for you guys who are interested in learning how to calculate your options and what the market moving does to it. You should also look up delta, theta, and gamma and how those affect your options as well. It will definitely change the way that you pick which ones you are going to buy, and especially should change which ones you are going to hold as far as your risk management goes. So if you found this video helpful, hit the like button, subscribe to the channel, leave me a comment, show me some love, and I'll see you on the next one.